Hello and welcome, everybody. I'm Zeus Caraval from ZK Research. It's time for real-time recorded week 7. I'm here with my good friend Dave Michaels. Dave, I'm back from Hawaii, and I must say my Boston and Canadian friends would be quite embarrassed of me. I went up for a bike ride yesterday. It was 65 degrees. I had a jacket on, I had a vest on, I had full-length gloves on, and something happened to me. I've gotten all acclimated where I get cold easy now. So now it's not like the rest of the country. You're in Denver, so you're probably a little thicker skinned than I am.
It's pretty cold here, I can tell you that. They said that if we're only halfway through the month and we're already tied for the coldest February on record, so it's cold.
I would think most of the country is saying that. So, but like I said, it's in the 60s here, so I think that's we're probably getting close to records here. This was a kind of a quiet week news-wise, but there was a lot of earnings. Right, so this is a big time earnings week. We're kind of at that time of the year where the quarters are winding down, and the first one we'll talk about is RingCentral, and you know that expression "for whom the bell tolls." Well, it's tolling awfully loud for RingCentral right now. That engine keeps going. The stock, actually, interesting enough, fell on the news. It was a pretty handy beat of 322 versus the street's estimate. They beat by about $12 million. Their guidance was strong as well, but this was a classic case of buy on rumor, sell on news. Everybody knew a good quarter was coming for Ring. The stock had been moving up before that. I had talked to people that thought, they were looking for a whisper number. I think they reported 322. They were looking like 340, almost 350 in some cases. So expectations of Ring are getting up there. I think some of the more interesting aspects of the quarter, one was just the large TCV deals. Their $1 million ones were up 50% sequentially. They had 2 over 10 million, and this kind of dispels the myth that cloud can't do big, right? We've been saying for a while that if you're going to do cloud and you're going to be a large enterprise, you got to roll your own. But they're doing some big ones. I think what Ring has done better than anyone, frankly, is the partnerships, right? We talk a lot about the Avaya ones. I know you've got some strong feelings on that. But AT&T brought them a lot of large TCV deals, and if you like the partnerships so far, wait for Voda. I can't wait to see what they do for Vodafone, because Vodafone's got a tremendous brand over in Europe. They're looking to expand there, and I think that may be, of all their partnerships outside of maybe Avaya, who's got that massive install base. I think Voda is going to do tremendous things for them, especially from a world that's becoming increasingly mobile centric. The bear case for Ring is, I think, isn't COVID. Like COVID, when people go back to work, we're not going to have less Ring. We're going to have more, because we're going to work in this hybrid environment where you want the same telephony features at home and in the office. But the bear case to me is around Zoom and what Zoom does with Zoom Phone. And if Zoom can be a credible phone vendor, I think that can give Ring some problems. But outside of that,
you got Microsoft too, and a lot of companies are making Cisco. A lot of people are making progress in calling.
Yeah, and so that's the question: is can they continue to attach more meetings, more contact center stuff like that to their calling base before it gets disruptive? So, what were your thoughts?
Well, first off, I kind of missed something they announced. We missed it the week before. They announced their momentum. What do they call it? Their platform upgrades. They have this new embeddable video capability, and we're going to talk about this when we get into Vonage and Twilio. But these being able to embed technology, particularly video, into other apps is really an important play right now. So I'm glad that they put that into their announcement, in their quarterly announcement. They also announced some new APIs for calling, for supervision, for monitoring and streaming. So they're still innovating besides selling. I think that what's really important about the embeddable plays is it increases the stickiness, because it's not too hard for a company to change their voice provider or even their meetings provider, but it gets pretty hard for a company to change their meetings voice and messaging provider and their embedded apps. And so it really creates a much more stickiness for their accounts, which is great. They also announced in their quarterly announcement the new board member, Arnie Duncan, who is a former U.S. Secretary of Education. I guess Betsy DeVos, too soon for Betsy DeVos, but I think that's he's from the Obama administration, and I think that's really going to help them in education. I know that's one of their targeted verticals. In fact, they mentioned they're getting more traction in their targeted verticals, so that's all in sync right there too. I think most importantly, though, for Ring is that they're seeing much bigger deals. They saw 50% increase in deals over
$1 million.
$1 million. That's total contract value, TCV.
Yeah.
Deals over $1 million were up over 50% sequentially, quarter to quarter. I couldn't help but notice, and I couldn't help but notice that in the briefing that they did, how often the word contact or the term contact center came up. I actually counted it. It came up, I think it was 15 times. They're really talking a lot about contact center. That's primarily through their InContact partnership, but they've also got their Engage portfolio, which has got the outbound contact center. They've also got omni-channel services. We're seeing a high attach rate in contact center. They said 60% of their large deals over $1 million TCV were had contact center. And so really getting some traction on contact center. And so I think that's going to be a theme we're going to be seeing a lot in how UC and CC are sold together. And then you already touched on it, this ACO is kicking in. You know, ACO was launched over a year ago. It seemed to get a real slow start, but now it's really picking up. They announced, one thing that kind of surprised me was they announced a 7,000 seat user win, or more than 7,000 seats. And that was direct routing. So I didn't realize that RingCentral's direct routing was part of ACO as well. So Avaya is able to sell direct routing into Teams through that ACO partnership. So those are my thoughts on RingCentral.
You know, by the way, you mentioned the education and contact center piece. I actually talked to one of the Ring resellers that started selling contact center into education, a vertical that's historically never bought contact center. And they said with all the parents calling in to get updates as the school open, is there COVID, things like that, they've actually had a contact center, the virtual bots answering. So that could open up a whole new app. Like when you think about what an office in a school is, it's kind of a contact center. And when you're answering the same question over and over,
that's the thing with CCaaS. People keep on saying, you know, how could CCaaS be so much bigger than regular contact center? It's just moving the deployment model, but it's actually all these new use cases. I mean, when you take away all the cost barriers, I don't have to buy $1 million of equipment to answer one call or to answer an attendance call or whatever. So the CCaaS opportunity is actually much bigger because there's just no barriers to entry. There's all kinds of new use cases. The next company to announce was Vonage, and I have to say, you know, Vonage has some great numbers here, and it's kind of, I can't think of a time in history where all the stocks were going up. I've lived through lots of times where all the stocks go down, but all the stocks, at least in our sector, are going up. And so I guess they all went down like in 2008, there was a dot-com crash, but they probably all went up after World War II, but that was a little bit before me. So not quite sure if this is the first time in my living history or just I wasn't paying attention, but the pandemic has been pretty good for enterprise communications. So
late 90s, right? That's the only time I remember the rise of the internet bubble, right? That everything went up then too. So.
No, that was okay, but that was .com. So we're okay.
Yeah.
Fair enough. So we're seeing a lot of enterprise communications. But so Vonage announced 17% up year over year, but the real star, of course, was their API for the old Nexpo services, up 33% year over year, beat estimates. And that's largely voice and video APIs that are being used in all kinds of applications. Their UCaaS and CCaaS divisions grew a mere 4%, which sounds kind of humble compared to that 33%, but very respectable. That's year over year. And they upped their guidance. I think the bigger news was that they decided to keep their consumer division. And of course, the Wall Street guys were upset about this because they were expecting a big cash bubble payment. But after a year evaluation, Vonage decided to keep it. I can't say I'm disappointed about this. I don't know how you feel about it, Zeus, but I think the consumer enterprise play kind of works well. It certainly works well for Zoom, works well for Logitech, works well for Microsoft. There's some synergies there. It couldn't have been worth very much to sell because it is a mature, declining business. And so they say it's going to be worth, they had a number, I can't remember, was it 600? Do you remember the number they said that thing was worth?
600 million over the next 5 years, it'll generate cash. Yeah.
600 million, so it's not bad. They're going to use that money to fund other profitable endeavors. And then lastly, they appointed a new EVP, head of product engineering, Savane Berry. He's not from IBM. I mean, that's the real story. They've been hiring a lot of people from IBM. He's not from IBM. He's actually from OpenText, a company we don't talk about very often, the great fax empire. But actually, OpenText is a pretty amazing company. It's been a Canadian company, been around for a long time. Barry's been there for a long time. They specialize in enterprise information management, do a lot of acquisitions. Actually a very similar profile to Vonage. Should be a good fit.
Yeah, they from a numbers perspective, right? They reported 323, which was a slight beat over the expectations of 316. One of the things neither you or I really knew Rory Reid coming in. Alan Mazarek was, of course, a big fan favorite with the analysts, so seeing him go was sad. But Rory's proven to be kind of an execution machine here, so I wasn't sure what to think of him coming in. I've never. When you hire IBM people, it's hard to tell whether they're successful because they're good or whether they're successful because they're from IBM, right? That's sort of a misnomer. I do think the problem with keeping the consumer business is it drags down the growth. So one of the things they did on the earnings call, which I think was smart, is they broke out consumer and business and they talked about them independently, which I think is the right thing to do because at least the Wall Street group can get a better sense of how the business side's growing. With that being said, you talked about the 600 million that's going to generate. They put very little work into that. It doesn't cost them anything to run it. So as long as they're not trying to drive a lot of innovation into it and stuff like that, which I really wouldn't see what you do with consumer anyways, then go ahead and keep it. And if you get a good offer down the road, I'm sure they'll take it. But right now, it doesn't make sense to give it away if you can drive cash. I think it's sort of a good news, bad news quarter that they did have modest growth on the UCaaS, even CCaaS side. The API business, though, in an area where they are better than Twilio is on the video API side. They're really strong there. And I actually, if you look at my last couple of Forbes posts, I had written something on embedded video and then one on video AI. I think video API is really kind of the future of this platform. Twilio gets a lot of its growth from things like two-factor authentication and things like that. And you could argue that market, there's going to be other ways to do that, right? So I think the areas that Vonage is on, they're in is a good one. So if you like Twilio, frankly, you should love Vonage because it's the same kind of cyclic trend that's driving it.
I would say it's even more mature. Twilio got their video capabilities from Currento. Vonage got theirs from TalkBox, and TalkBox was an early pioneer in WebRTC, really early with the API model, and they were part of Telefonica. Much more mature than Currento, and bringing a much more proven track record to Vonage.
Yeah, and I think I think on the stock pullback, based on the fact that Wall Street was a little disappointed they didn't sell it, I think it's a good time to buy the stock. I think of all the UCaaS and CCaaS players, they are the most undervalued. Not that we can give official buy, hold, sell recommendations. It's just my Zeus Caraval opinion. This to me, there's a lot more potential upside here than you might get in some of the other names.
So the last company we're going to cover was Twilio, which announced their results this week as well in week 7. And no surprise, I guess it's a surprise for some, but they had a great quarter as well. Some people were very concerned they were already overvalued. Expectations were very high, but they managed to exceed expectations again. And I have to say, it's really coming together nicely at Twilio. They've got the same CEO, the founder, there for this whole time, and all these little pieces they've been announcing over the last few years that seem kind of separate are really coming together into this nice, we'll call it orchestra or something. They announced Twilio Conversations a few years ago. Yeah. Two-way multi-channel, get it. Two-way multi-channel conversations. But now, really the way that they're pulling together the sophisticated messaging-based conversations as a service is coming together, and that's complemented by their Flex capabilities in the contact center. It's complemented by their AI capabilities with Autopilot that they launched, and now it's being complemented by Segment, which they acquired. And this is the first quarter that Segment contributed revenue or broken out revenue, contributed $23 million in Q4. Also, they've been expanding their channel efforts because they used to always be a very direct model. And their channel efforts are really picking up. They said that consulting partners influenced 3 times as much revenue as they did in 2019. They were involved in 50% of their top Flex deals. They announced a big increase in $1 million deals, 93% growth over year. Hard to get much bigger than that. So really things are coming together very nicely at Twilio. And another thing we always talk about with Twilio is they always talk about how many developers they have, and you don't really know what that means because it's not hard to be a developer and to be certified on Twilio. But now they're actually telling us active customer accounts, and they exceeded 221,000 as of December 31st. So that's up significantly from 179,000 prior year, 179,000 prior year. So things are just coming together nicely at Twilio. I think they've got more growth to go. What do you think, Zeus?
Well, there's two questions, right? Is there more growth to grow? Are they a good company? And is the stock overvalued? So I think there's more growth to come, but I also think the stock's overvalued. They did put up a great quarter. Q4 revenue is up 65% year over year. It was 548 million. Think about it, Dave. They are at over 2 billion in revenue now annually, which is phenomenal for a company that sells things at a dime at a time, right? Their unit price is like you pay a nickel for messaging, right? They sell $2 billion worth of those. Now, from an overall valuation perspective, though, at their current market cap of $66 billion, if they're going to support this going forward, they're eventually going to need to generate about $2 billion or so in profits, and they don't make money yet, or they make very little, right? So Wall Street's rewarded them for growth, but eventually you got to pay the piper and start making some money. And so the question is, when does Wall Street change their focus from growth to profitability? Right. Right now, it seems we're at least a year away from that. I do think if you're an investor and you like the secular trend of CPaaS, there are better places to put your money where you'll get more upside. For instance, Bandwidth trades at a PE of about 413, I think it was. Twilio's 33.77. So you can see right there, you got a pretty big discrepancy. Now, Bandwidth doesn't have the same growth curve as Twilio, but Bandwidth has a lot of other things. They got a good, Microsoft routing play. They got a good E911 story. Vonage is what we talked about before. Also is an excellent Nexmo, API platform. As we talked about, I think they're better on the API side than Twilio on the video API side, anyways. With that being said, look, I think Twilio is a great company, and I think they're here for the long haul. I just think at this current valuation, they're now priced for perfection. And if they hiccup along the way anywhere, you're going to see a big correction. If that does happen, that's when I'd buy the stock. But right now, I think it's just we're looking at really, really lofty expectations here that'll eventually get too, very hard to meet. So.
All right. Well, that wraps up week 7 of the real-time recorded. Thanks for watching. We'll be back next week with week 8.